Everybody, let's get started. A couple people might join late, but that's okay. Just wanted to welcome everybody to the conversation today. Really excited for this. Today's panel is going to be more of an open conversation between two industry experts. We have the CEO of Bitbuy and Wonderfy, Dean Skurka here. We also have the CEO of Figment, one of the biggest staking companies in the world, Lorien Gabel here. So we're really excited to have both these great guys here, two of the leaders in the industry, two guys with great hair. I'm feeling a little jealous over here, looking over at these two, but it's going to be a great discussion. So we encourage everybody to jump in the questions as well. We're going to have a long Q&A at the end. We're also going to do a live draw for Kyle Lowry basketball. I know a lot of you know that Kyle Lowry is one of our promotional partners, so we're looking forward to giving one of those away to somebody on the call. And before we get started, just want to say that this webinar is intended for informational purposes only. Nothing should be considered legal, tax, or investment advice. None of the webinar presenters are licensed financial advisors. Participating in digital assets, as always, comes with risk, so please speak to an advisor before participating. That just a little legal disclaimer there for everybody before we get started. So yeah, let's kick it off. Thanks again, everybody, for being here. Lorien, I wanted to start with you. Your company Figment is a staking leader here in Canada and abroad. So there's a lot of people on the call today that are probably pretty new to staking. Bitbuy, we just launched staking. It's a brand new offering for us. So there might be a lot of people here who are completely unfamiliar with it. So can you take a crack at explaining staking just at a base level and kind of why it's so important for the crypto ecosystem?
Yeah, thanks very much, Charlie. We're really looking forward to being here, and thanks for everyone taking their time from their valuable day to listen to us. So first of all, with respect to staking, unfortunately, it has meant and means a bunch of different things. It's a poorly defined term. We've been doing our best to define staking as protocol staking, and so staking is sometimes meant lending. It is sometimes meant, yield farming. It's none of the staking that we're going to be talking about is none of those. So I'm going to, I mean something called protocol staking. I'll use staking as terminology, but unfortunately, I just want to be clear on what it's not. I think the simplest way to think about staking is it's been a bit of an open secret, but there's been a fundamental change in the way you can think of it as operating systems for blockchains over the last 4 or 5 years. Everyone's probably familiar with Bitcoin, runs on something called proof of work. We're all, probably people have a pretty high level of knowledge about that, what that is, but there's a bunch of miners who use a lot of electricity and computing power to maintain the ledger. They essentially compete to maintain the ledger, produce the next block, process transactions, and in return they get new Bitcoin for that. Some people have ESG energy concerns around Bitcoin miners, etc. Nothing I'm about to say should be sort of construed as a negative statement about Bitcoin or proof of work. I own Bitcoin. I love Bitcoin. You can put down any virtual projectiles you might have, etc. But around 5 or 6 years ago, people were saying, hey, proof of work works. It's very effective. Bitcoin's never been hacked. Is there perhaps another way that might be scalable in a different way, maybe use less energy, and that is something called proof of stake. And so, about 6 or 7 years ago, there were some white papers floating around, and then the Ethereum community was really looking at it seriously as making that transition, which has just recently happened. So Ethereum has now moved from proof of work to proof of stake. If there's one thing maybe if I could really simplify it down, if there's one thing to know about the differences between proof of work and proof of stake, there's a whole bunch of technical differences. There's a whole bunch of stuff around energy consumption and et cetera, et cetera. But if there's really a sort of one thing to take away from this, I would say that with proof of work, you have really two audiences. You have the people maintaining and running the Bitcoin network, and then you have the holders of Bitcoin. And those two audiences are pretty separate. Usually their interests are aligned because of how the protocol is built, but not always. With proof of stake, it essentially brings those functions together. So if you hold Ethereum or Solana or another proof of stake, a token, you have the right, but not the obligation to basically become this version of a miner, so to run the protocol. So you can stake your ETH to a node. That node then processes transactions, maintains the ledger. Instead of using electricity and compute power as what you're putting up to stake, you're putting up the native token. So that's really the big difference. So what it really enables you as a holder of a token, you can do a number of things with that token as a developer or whatever. You can also help run the protocol. So that's the simplest thing. It essentially brings those two functions together. So there's really no distinction now between the people who hold the tokens and run the protocol. So I think that's the best way to think of staking as a token holder. And then you can do that yourself, depending on the level of complexity, or hopefully you'll use someone like Bitbuy or Figment to, we all have scale and we've been running these things for years, and they'll sometimes be a little bit complicated, but it's permissionless. You could do it yourself if you wanted, but hopefully you'll use someone like us to do that for a whole host of reasons, which we can get into.
Awesome. I'm sure we'll get into a little bit of that later. Dean, from a Bitbuy perspective, why are you excited to launch staking with a regulator-approved offering, and why is that significant for the Canadian marketplace?
Yeah, absolutely. Thanks for the question, Charlie. I think some of the one of the most reasons why I'm most excited about being able to offer staking in a regulated platform environment, certainly in Canada, is primarily reflected by some of the stuff that we've seen transpire in the last month in crypto. And so, and more so, this year. So what have we seen this year? We've seen unregistered offshore platforms either go bankrupt or, get exploited for being, or rather not exploited, but getting uncovered as, what is unlikely, fraudulent behavior. And so you look at, platforms like BlockFi, you look at platforms like Celsius and Voyager. These platforms are offering unsustainable yield offerings to clients. And, for the purposes of this, I'll focus primarily on Canadians. And so what were we seeing as platform operators with a regulated spot trading platform in Canada? We'd see Canadians coming and buying Ethereum or other digital assets, and we'd see them getting withdrawn to platforms like BlockFi, Voyager, Celsius, or others to either participate in yield opportunities that were largely focused around borrow lend, or decentralized platforms, or others that were providing staking services. And so what we've seen this year is the risk that Canadians put upon themselves when they use unregistered platforms outside of Canada. And so as amazing as it was for platforms like Bitbuy and Coinberry to get registered with the OSC and Canadian Securities Administrators for spot trading, the pace of this industry moves a lot quicker than regulators, perhaps. And so, it left Canadians in a vulnerable position whereby they could buy and sell digital assets in Canada on safe and trusted platforms with regulatory frameworks to support that. But they were unable to participate in staking, DeFi, NFTs, and other initiatives that the broader ecosystem can provide within those same safe, compliant, and regulated environments. And so, unfortunately, like I mentioned, this year, we've seen too many bad examples of what can go wrong. And, I think this represents a few things: a really safe and compliant way for Canadians to now stake and do so with the understanding that the platforms they are using are registered with securities regulators in Canada. And, I think in addition to that, it really reflects well on the regulators that we have in Canada to recognize that, this ecosystem is not solely consistent of spot trading. And so, for me, I think it's super important for companies like ours to push the boundaries and really demonstrate to our regulators how, additional activity like staking can be done in a safe and compliant manner, and demonstrate that to them, and then work with them towards a view of having these offerings and services provided within Bitbuy in a regulated way. So, to me, this is a really strong signal, to Canadian participants within crypto that there is a safe platform for them to use for the purposes of staking. And then, looking ahead, I think it's a really strong signal, with respect to how Canada is looking at this industry and how it wants to be or provide a meaningful venue for these assets in this industry to grow. And I think that staking is one example, and for platforms like ours, it'll be important to continue to push the boundaries and bring forward ways in which we can offer the broader services or tools or products that are being utilized in crypto in Canada, keep that activity contained within Canada and keep it contained in a regulated and safe environment that'll protect Canadian investors.
And just to maybe sort of double on those comments is, as I sort of said at the top, staking is significantly different from what was going on with some of those more unfortunate platforms, which you referred to, in that there is no, when you stake, there is no counterparty risk. So you don't, however your tokens are held from a custody perspective with a registered custodian, which they are in this circumstance, you don't, if your staking provider, in our case, were to disappear, there's no loss of funds possible. In other words, staking, there's no change of how you hold your keys or how you hold custody of your tokens. There's no counterparty risk. This isn't a loan. You're not giving up control of your assets. So it is fundamentally different from a whole host of those activities, which didn't end up very well for a number of people, unfortunately.
I think that's a great point too, actually, because when we sort of step back and think about how we could introduce yield opportunities into our platforms, certainly at the time, some of these borrow lend platforms still existed and were doing so quite successfully. For us, when we think about how we can get regulated products through the scrutiny of our regulators, we certainly think about some of the counterparty risks associated. And certainly to Lorien's point, when you're looking at borrow lend protocols that are offering maybe unrealistic yields, you really got to think about who the counterparties are and what type of risks are associated with that. And for us as a business, we took the direction of we are going to start and stick with staking for many of the reasons Lorien mentioned, certainly most importantly, mitigating any counterparty risk associated and having these assets strictly sent to the protocol.
Yeah. Lorien, maybe you could expand a little. When somebody's staking crypto on Bitbuy and it's going through Figment or one of your other partners, maybe you can explain a little bit what's happening behind the scenes. Where does that crypto go? How's Figment play in? Where do the rewards come from?
Right. So there's really two questions there. Great question. So staking sounds like you're giving your tokens to someone. Other words for it are nominating, electing, delegating. And really what you're doing is you're giving Figment and Bitbuy the right to run the validator nodes on your behalf. So it's like a voting. It's like an election mechanism, and so you're not actually your tokens aren't moving. It's part of the blockchain. You're basically giving us the right to run that hardware and that software on your behalf. So that's what's actually happening behind the scenes. And then there's a staking transaction that happens on chain. Then there's an unstaking transaction that when you want to unstake. So that's I don't know if that's entirely clear, but that's what's happening. You're not actually moving your tokens anywhere, which is a good thing. You know where they are. They're still in your account. They're still held by a registered custodian, etc. How are rewards generated? So there's really two inputs into how much rewards you're going to earn from a given blockchain. One is you're essentially being paid for block production and maintaining the ledger, and this is very similar to proof of work. So whoever wins the computing computation on Bitcoin to produce the next block in the ledger gets a Bitcoin. So similar here. It's called a natural inflation rate. There's an inflation rate built into the protocol, which is based on a number of criteria, such as what's the staking rate, etc. But essentially, the protocol pays you, as someone who's running that hardware and software. We're running on your behalf, but you can think of it as you running it to maintain the ledger and produce the next block. So that's number one. And then there's also a set of rewards generated essentially by usage. So that's you've probably heard about gas fees in Ethereum. It's very similar to that. So the more people using a protocol, the more developers building on it, the more external value capture, then the higher that reward rate will be, essentially. So there's really two inputs to any given protocol. So for Ethereum, you can think of it as how many people are staking on Ethereum. You know, right now it's 10 or 12%. There's one more big upgrade to go. It will probably move up to 40 or 50%. That'll like slightly lower the reward rate as that number goes up. And then the more people that use Ethereum, the more transactions processed, that will increase the reward rate. And then if there's a protocol that no one's using or no one's building on, then you would expect over time that reward rate to be lower.
That's awesome. That's a great explanation. And Lorien talked a little bit at the top about some of the false narratives around staking and crypto yield in general. Just I think it's a really good time, maybe for both of you to talk a little bit about some of the misconceptions and how this is not, like a Celsius or like a Voyager where there's non-transparent yield going on, and maybe you guys could both take a stab at kind of talking.
Maybe I'll jump in there. I mean, my view is that many of those, those super high yields, whenever you sort of see that, it kind of brings. I'm old enough, unfortunately, to remember like the SNL crisis way back when, in Texas, etc. And what you're basically seeing is a set of unregulated SNLs, basically, in my view, and a lot of those and some circular lending programs. Whereas in the case of the staking we're talking about right now, you're actually performing a function. Like you don't earn a reward rate for doing nothing. You actually have to run the protocol. In other words, you have to provide compute resources to the protocol. You have to process the transactions. You have to make sure it's secure. So there's a role going on. If the network's like Ethereum is being used for a whole host of activities, then you're being paid by that community, that protocol to run that. Now, again, you can do it yourself. You can figure out how to run your own staking nodes if you have sort of probably most of us on this call, well, maybe with the exception of myself, could figure out how to do it in 30 days, or you can outsource the running of that infrastructure to someone else. But essentially it's not as if you're giving someone money and you have no idea what they're doing. You don't know how that value, the yields seem like too high to be true, which is obviously the case. Here you're actually playing a role. You're the current version of mining on the network. So there's a very, very distinct value exchange there.
Yeah, I mean, just to add, I think what we've sort of seen throughout the year with some of these bankruptcies and then what's happened with FTX, sort of the tight-knit circle of companies that really determine the borrow-lend markets in crypto. And, you look at examples where FTX would lend money to BlockFi, but then BlockFi would lend money to Alameda or Three Arrows, and it was a small group of people effectively, passing money back and forth. And I think fundamentally the borrow lend markets, you take a look at what happened, and that business model has just not proven to work. Certainly not when markets are contracting the way they have this year. And so, my view, a lot of those models had to get flushed out for the industry to continue to move forward. But certainly, as I referenced earlier, the way, we have to look at things as a regulated platform is, how are we going to, convince the regulators that what we are proposing to do is being done in a way that, protects Canadian investors. And certainly if we go to them and propose a scenario where we are offering larger than what would be realistic yields on altcoins that are thinly traded, the question would come to us, well, how is that yield being generated? And if we're simply borrowing it out to one or two trading desks, that's, probably not best practice and certainly hard to scale, because as we've seen, in better market environments, perhaps, they can subsidize that yield through, marketing budgets, or subsidize it through, appreciation by certain token prices. When the markets collapse, the borrow lend markets collapse with it, and it's just really not a sustainable model. And so, for us, again, some of the benefits of staking is the consistency around the model and the the mitigation of counterparty risk. And so you look at what happened at Three Arrows, who was a massive institutional trading firm in this industry. The borrow lend markets basically collapsed when they were no longer there to borrow. And so, the counterparty risk associated with these borrow lend markets are certainly far more substantial than anything we've seen with staking. And, if one or two, trading desks, such as a Three Arrows or a Genesis collapse or stop, trading at the levels they were, sort of the house of cards comes apart very quickly. And so, as a regulated platform, we can't even begin to think about a model that can be impacted the way that could be by certain players or simply by price action. So for us, staking was, really the only path forward for us to be able to offer clients an ability to earn yield on our platform. And I think the fact that we were able to, show the regulators how we could do this in a safe and compliant manner with trusted partners like Figment and Bitgo really speak to that. And I think it's, demonstratable in and of itself. And, what I'd say to, anybody listening on this call, like to Lorien's point, if the yields seem too good to be true, they probably are. And, you just got to be, when you're sending your money off to another platform that may or may not be registered in Canada, that may or may not be offering you something that may feel too good to be true, you just really got to do your homework and understand where that yield is coming from and if it's sustainable and what happens if, something goes wrong with respect to your ability to get your funds out.
Yeah, just to emphasize, maybe we haven't talked about custody enough, but custody here is divided between the exchange, us, and Bitgo. And Bitgo is I think they're the longest running the first regulated custodian in the US, largest in the business. And so unlike the FTX scenario where they also took custody, here you have a division of those responsibilities between the exchange, between staking, and between custody. And I think that's like super important not to have all those levels of trust in one party.
Yeah, there's a lot of protections in place for sure. We've been getting some good questions from the audience. I'm going to kick it over to one of the audience questions. If you have more in the audience, please submit them through the Q&A function down at the bottom. So this one's a little more, more meta, I'd say, but what impact does staking have on the decentralization of a blockchain? How does it affect the distribution of power among network participants?
Right. So
Lorien.
Yeah, so that's a great question. My personal opinion on decentralization is it's not a binary. As they say, it's kind of like a spectrum. So certain blockchains have very high levels of decentralization as measured. Other ones less so. Developers, application users will sort of decide what level of censorship resistance or decentralization or control is comfortable, depending on the blockchain. So I would just say it's not usually like this blockchain is decentralized, this one is not. There's going to be a spectrum. And in the case of staking in particular, there is technically a number where if one person had 1/3, so if there was one person who had 1/3 of Ethereum, they could control the protocol and do some pretty bad things. That's kind of like a rough line in the sand where if there was like one holder who controlled, getting close to 33%, you might say, this doesn't really look like a decentralized blockchain at all. So again, I think when you have, protocols like Ethereum, there are tens, maybe hundreds of thousands of holders. I highly doubt that anyone has more than, a percentage point two over Ethereum. I don't know that for sure. But, that's obviously very decentralized protocol. On newer protocols, perhaps where there was a smaller investor base to start, you would see higher levels of concentration. I don't think I've seen one that is like close to 33% with either like a provider providing that infrastructure or a token holder. But those are kind of the things to think about when you're thinking about decentralization. Now, people there's been some like theoretical and philosophical debates about, where's there a higher concentration in Bitcoin miners controlling Bitcoin, or at least providing infrastructure? Will proof of stake aggregate to the people who have the most tokens over time? That hasn't happened to date. There's a bunch of like kind of fun online arguments about that, and I guess we'll see where that plays out. But really, sort of just keep that 33% number in your head. And if there's if you saw even as Figment as a provider, we've never gotten that close. But if we were suddenly providing 20% of infrastructure on a protocol, that would make us very nervous. Not because we want to do anything nefarious, but because we'd have a very large role in that protocol, and that just wouldn't make us feel very comfortable. So
for sure, that's a good answer. There's a couple questions on here about how staking works on Bitbuy. So Dean, maybe this is a good one for you. Is it possible to unstake anytime? How is the reward calculated? How is the reward shared between Bitbuy and the holder of the token? Do you maybe just want to explain a little bit about how the fees work?
Maybe Dean, I'll take the unstaking one, and then you take the second part of that. So each protocol has what's known as a bonding or an unbonding period. So when you stake in Ethereum, when there's full liquidity, it'll probably be 3 days. So there will be a 3-day limit, basically a hold on your funds for 3 days when you unstake, where you can't move them. For something like Solana, it's less than a day. Each protocol, there's something, like Polkadot, it's 28 days. So there is, with each staking protocol, there is, you're essentially locking them up for a period of days. It's always, I want to be careful. Yeah, it's always less than 28 days. I don't know any protocols that are longer than that. And usually it's, it's sort of 1 to 5 day time frame. So that's kind of what staking in the unstaking transaction means. And it's called bonding or unbonding also.
Do you want to maybe just expand on like how Ethereum's currently set up, Lorien? I think you'd probably do it better than I would.
Right. So Ethereum has gone through this kind of amazing, I think it's technically pretty amazing and pretty cool over the past couple of years, but in the last 3 months, there was the final, what's called the merge. And essentially what they did is they changed out, they swapped out the engine in the airplane while it was flying. I think of the engine as the operating system, which is pretty incredible. And what the community, no one person has done this, but the core developers and all the participants in the community have managed to do is essentially transition Ethereum to proof of work, to proof of stake from proof of work. During that process, essentially, if you stake your ETH tokens, you have been unable to move those stake tokens until one last upgrade, which should happen, I expect, in the next 3 months, plus or minus a month or two. Again, with Ethereum, it's a decentralized developer community. It's not like there's one hard date, although the community has been hitting its target dates over the past year and a half pretty consistently. So right now, if you stake ETH, your ETH is locked up potentially indefinitely, though probably in the next 2 or 3 months, although part of your rewards are liquid, the rewards that you earn. So that's why you see ETH staking rates, below 15%, because obviously people, there are some people who are like, I'm never selling my ETH, so it doesn't matter, I might as well stake. But for most people, they're like, might want some liquidity, who knows? So I'm not comfortable staking. So that's why the staking rates are where they are right now. Once those staking the amount staked is liquid or liquid within 3 days of unstaking, then as I said, I expect those rates to probably jump pretty significantly to 40 or 50%, which is what's happened on the proof of stake protocols. But yes, right now, if you stake your ETH, the amount staked, not necessarily the rewards, will be illiquid, or you won't be able to transfer them until this one last upgrade is done. It's called Shanghai upgrade, if you want to go online and look about it and read about it.
Yeah, I mean, I think you do a better job at explaining that than I would. So thank you for that. I think in terms of, how we wanted to offer staking to our users, certainly from a user perspective, we wanted to make it as seamless and straightforward as possible. And so, certainly if you have Ethereum, Solana, or Matic in your account, it's as simple as, one click and entering in the amounts of either that you are wishing to stake, and, similarly to unstake, except for the, in the case of Ethereum, which cannot be unstaked until the Shanghai upgrade is completed. And I think it's just as simple as that. For us, it was really just about making this as easy as possible, not setting up separate accounts and not setting up separate wallets or anything to that effect. Everything can be done right out of your wallet within your Bitbuy account.
Okay, we got another question about the risk. So someone said, sorry, that's the wrong question. Is there any other potential downside to staking beyond the lockup period? Is there any conceivable way to lose your money? Is this effectively a certificate of deposit investment?
Yes. So while there aren't counterparty risks, etc., there are 2 edge case things that can happen if we don't do our job. One of them, basically, you can think of it as downtime. If we were to go down for a significant amount of time, you would miss out on rewards. So that's not a loss of anything, but your effective reward rate would be lower. Just to say, we've been operating for 5 years. We've never had a significant amount of missed rewards that we haven't been able to compensate our users for. We come out of the data center operating environment and are very used to operating in a multiple .9 operating environment. So one is, if we don't do our job, if we were down on a protocol for a significant amount of time, you would have a lower reward rate. The other one is something called double signing. Double signing is very bad. It's essentially, what it looks like to the protocol is that we're trying to do something nefarious, like fork the network, or you can also think of a little bit like trying to spend a digital token twice, which is obviously the whole point of a digital token. And it's called slashing or double signing, and it's as bad as it sounds. And in that case, depending on the protocol, you can lose 1 to 5% of your principal in that case, depending on the protocol. Now, some protocols don't have slashing at all. For example, Solana. So those are the two risks. In both those cases, we have SLAs, insurance, et cetera, to cover those risks. In the case of slashing, hasn't happened. Double sign slashing has never happened to Figment. I should knock on wood now that I've gone and said it. We have something internally saying that, which is safety over liveness. So we will always, if something were to go wrong technically, we would always prefer to have downtime, which would just be some missed rewards, which we can easily compensate users for, versus any chance of slashing due to double sign. So that's about it on the stake. Now you do have general protocol, like as a token holder of any token, you have protocol level risks. Whether the protocol itself fails or succeeds over a long time, but that has nothing to do with staking.
Awesome. So I just wanted to say there's definitely a lot of information about how Bitbuy does staking at bitbuy.ca/staking. I've noticed there's a lot of specific questions about what coins do we have, what are the yields. So I'm not going to answer any of those live on the call, but definitely check out bitbuy.ca/staking for all those questions. There are some questions about if Bitbuy retains a percentage and the fees that we charge. So Dean, do you maybe want to speak to that?
Sure. I mean, currently, with the introduction of staking and really trying to build awareness around this product and how it can, work for certain Canadian investors, we've waived the fees that are associated with staking on our side. And so for the purposes of the initial launch period of this, there's no fees associated on, when using Bitbuy to stake your Ethereum, Solana, or Matic.
That's awesome. Okay, a couple other questions here. So a lot of questions about the commissions here. Someone asked, is there any way to stake my DeFi crypto versus Bitbuy? So I think they're trying to get at tokens that we don't offer. So I can just step in and answer that one. We are going to be adding more tokens. As of right now, you can only stake the tokens that we're offering staking for. So we're not a decentralized wallet where you can connect to your own staking protocols. It's all, what we're offering on the platform.
Yeah, and I'll just add to that. I think, like, in terms of the question on whether you could stake your assets using DeFi protocols or platforms, I think certainly, members of the audience or individuals on our platforms that have that level of understanding and comfort with respect to, non-custodial wallets, that certainly is available to them. The way I look at, this offering is it's really geared towards, early participants and people that are still educating themselves on the space, and certainly with respect to maintaining their own custodial wallets. So certainly where people have the comfort to leverage DeFi or other protocols like Lido for the purposes of staking, that'll certainly be made available to them. They can still buy their coins through Bitbuy and then send them off to their non-custodial wallet to stake how they'd like. But really what we're trying to do is create a ecosystem of regulated products for Canadians that they can feel safe using and certainly trust. And I think that'll resonate mostly with early participants, that maybe don't have the comfort or the confidence or even the understanding to maintain their own custodial wallets and then stake on decentralized platforms accordingly.
Another question. So there's a lot of there's actually a few questions here about why the percentage of rewards fluctuate. Why one day it's 5% and the next day for the same coin it's more or less. Do you want to jump in and explain that, Lorien?
Right. So as mentioned, there are really two factors that go into that reward rate on a protocol. They shouldn't fluctuate on a daily basis by massive amounts. They will change over time, but you shouldn't see like deltas of like 50 or 60% in a given day. And they should be like relatively consistent, and then you'll see trends. But again, there's two things to determine that reward rate. So one is the protocol's inflation rate, which is, again, that's what you get paid for maintaining the ledger, essentially. And that rate is determined, like it's baked into the protocol. It's available. It's all open source, and that rate is determined essentially a function of time and then the level of staking. So protocols want to incent people to stake, because that increases the security of the network. So when a protocol launches, usually that staking inflation rate, the reward rate, is very high, and then decreases over time and as staking rates increase. So that's one piece of it. So if all of a sudden there was a whole bunch of people for some reason unstaking, you would see that part of the reward rate actually go up. If all of a sudden, probably what happens after the next ETH merge, a bunch of people start staking ETH, you will see the amount paid for inflation go down. And then there's also usage. So that you can really think of it as like, to be like really specific, like if there was a protocol you were on and there was a massive NFT drop, and all of a sudden usage went up and there was a lot of the equivalent of gas fees being paid, then you would expect that reward rate to go up. And if no one was using a given blockchain, no one was building on it, then there's no transaction fees, and you would expect that to go down. So those are really the two variables that go into determining that rate and why it will change on any given period of time.
All right, we got a good one here. How do shifts in the broader market environment, such as regulatory changes or shifts in user preferences, impact the adoption and success of your staking-based blockchain networks? Dean, do you want to take a look at that one?
Certainly. I think when you look at the broader market environment, certainly, more recently with FTX and, more generally speaking this year with some of the other companies we've referred to that have gotten into some trouble, definitely a bit of a lack of confidence in the industry as a whole. And, I think platforms like this or offerings like this will, go a long way to sort of rebuilding that trust in the long term. And so, my hope is that, regulatory changes such as, the OSC and the CSA working with Bitbuy and other platforms to put forward a framework in place for staking, I think that will impact adoption to the positive. And I think it fundamentally comes down to, people on the periphery or, early participants really having the comfort and trust to use platforms like ours to participate within the crypto ecosystem more broadly than simply buying or selling digital assets. And so I think, we often think about, BitBuy or Coinberry as on-ramps to the industry, whereby people come in and purchase digital assets for the first time and really start the journey and the education process around, what is Bitcoin, what is Ethereum, what can blockchains be used for, utilized for, how can they create efficiencies longer term with certain examples. And certainly having an ability to buy, sell digital assets on a regular platform like that, and now start to actually see additional use cases that do exist, such as staking. I certainly think that will have a positive impact on adoption. And for us, it's really about educating our users on not only what Bitcoin is and what Ethereum is, but the broader ecosystem as well. And so being able to introduce staking and educate our clients on what staking can provide for them, and being able to do so in a regulated environment, I think that'll certainly bode well for long-term adoption in Canada. And for us, it's really about identifying the protocols that we believe in, and we believe Canadians will want to stake longer term, and continuing to add to not only our list of coins that can be staked, But as I mentioned earlier, continuing to work with regulators to identify what other products or services can we offer within this regulated ecosystem that will just continue to spur adoption in Canada.
Lorien, you have a bit more of a global view on things since you operate in a lot more countries than just Canada. So maybe just your take on where regulation and staking could be going.
Yeah, so I think there's my general. So I have a bunch of thoughts on regulation, crypto in general. So my first thing is, I think in the West, Canada, the US, Europe, we will limp along to a regulatory environment that protects consumers and everyone can be somewhat comfortable with. I wish that we had a theory of the case, that maybe our leaders saw this more as a very strategic technology that we should adopt, and sort of had a theory of the case. But that's not really how our governance goes, particularly in the U.S. And so you're kind of at the whims of a senator or some type of midterm election or something crazy like that. And so it would be great, if again someone saw this as a really strategic technology that we want to enable, allow people to experiment, protect consumers, and had a like a strong theory of the case. What's the Winston Churchill saying, that the Americans will do the right thing after they've tried everything else? So I think that's kind of where we're at. And so we're kind of 2 steps forward, 1 step backward. But in a few years, I think that that within so the U.S. and Canada will have a really useful, imperfect but useful and regulatory environment. So that's kind of my overall view about regulations in crypto. It's not going to be banned. It's too late for that. There's too much value in decentralization. I can sort of go off on why I think it's super important for our overly centralized tech stack and financial stack right now. So that's one piece. Staking in particular, I think is pretty low on the things that regulators need to worry about, and crypto and blockchain. There hasn't been any, consumer losses, again, because you don't actually give up control of your tokens to stake that asset. Again, you either do it yourself or have someone run that infrastructure on your behalf. There hasn't been any large or any cases of like consumer loss or fraud or anything like that associated with it. So I think regulators are keeping their eye on it, but there's a whole bunch of things that they have to worry about more, things like FTX, etc. So that's kind of my view where we are now. The OSC has been very, I would say, forward thinking and advanced thinking in this respect. They actually were really interested. They dug in on a very technical level, on a custody level, to really understand the risks. That they really took a deep look at it. There was technical presentations to really understand the technology, and I would say that in Canada, it kind of I think puts us in a pretty positive regulatory light in that they've done the work. They've done what they should do as regulators, rather than going on TikTok and making videos and whatever, pontificating. The regulators have actually done their job here and done their due diligence, etc. So I'm actually pretty proud as a Canadian to see that, and would like to see it in the US a little bit more. But yeah, so that's kind of my sort of rambling view on where we are in staking and regulation.
That's great. All right, I think we're gonna do one or two more, and then we'll get out of here and do the live giveaway. Just wanted to. There's been a couple questions about the general market and kind of where things go from here. Maybe from a 5-year look ahead, where do you guys see staking as part of the general crypto ecosystem? Is this something that institutions are going to be doing? Is this something that just long-term holders are going to be doing, and trading still going to dominate? Just kind of your thoughts, I guess, on the future. It can be kind of an open-ended question, just to wrap up here.
Maybe I will. I was going to go on a little bit of rant about why I think this technology is important. So maybe I'll take it, if you'll allow me to freestyle a little bit.
Rant away. Let's go.
Okay, great, awesome, good. So why I think this, like the core technology, is super important. I think that 30 years ago, I had a very early ISP business. Dial up, for those old enough to remember those beeping modems. And really the promise of the internet at that time was really about a peer-to-peer communication medium where end users were in control of their data and their content, etc. And I think we saw that for maybe the first 15 or 20 years of the development of the internet. And over the last, maybe 10 years, essentially what's happened is you've seen like an extreme centralization in the tech stack. A few big companies essentially control our data. You don't really know how they monetize it. Google makes billions of dollars with your data. You don't really get any of that. You don't really share it. You don't really know how it's being used. We also have a high concentration in financial entities, which basically end up as gatekeepers in some ways. So I think that, and everyone kind of knows it, no matter like how old you are, where you live, rich or poor, like no one feels totally comfortable with like the internet these days, right? You always have this like, why are your kids getting served up these weird videos? Why are you angry after reading Twitter? Like everyone knows something is not quite right. And I would argue that's because there's been too much centralization in our financial and our tech stack. And so no one on this phone call is like on the Zoom call isn't that, and we don't want to like tear down the system. But what I do believe is that this technology is a counterbalance to some of those forces, and that it'll weaken or offer people alternatives to just using a few large entities that you really have no control or knowledge about what they're doing with your data or whatever, or the algorithms, etc. So I really see this technology as being a counterbalance to the over centralization. Again, we're not anarchists. We're here to build businesses. We want to serve our customers, but really there's something wrong in our tech and our financial stack. And I really see this technology potentially as a way to counterbalance that for everyone's benefit. So there's my little rant about that. Staking, obviously I don't want, talk my own book. I'm a staking provider. I provide that infrastructure. So, I think it's a pretty bright future. We're seeing lots of institutional adoption. I don't necessarily care that much about the institutional adoption. I really want to see users adopt these blockchains and start building on them and finding real use case examples. But yes, that is happening.
Yeah, I agree with everything you've said. And then maybe just to add, maybe less about staking, more about just, the digital asset industry more generally. I remember when I joined the industry in 2018, similar contraction period to what we're going through this year. But I remember the narrative being largely focused around Bitcoin being banned in this country or this jurisdiction. And there was a lot of talk about whether or not there was legitimacy at all with this industry or this asset class. Where we are today, despite similar retracements in pricing, you still see a lot of positive signals, or at least advancements along the lines of regulation, certainly in Canada with staking, but maybe even abroad, you certainly see a willingness from the US to continue to push through, their process, albeit slow and undetermined what the net outcome is. But, there are not calls for banning these assets or this industry. And so I think, if I was to compare the two environments that we're in, 4 years ago and today, certainly a lot more confidence in the asset class and industry as a whole. So I think that'll continue to compound over the next, whether it's 3, 5 years, whatever it might be. You look at what happened with FTX, unfortunately, it's terrible what happened, and a lot of people have been impacted. I kind of draw comparisons to what happened in 2019 in Canada with Quadriga. Many people lost money, and it was a horrible event. But on the back of that, Canadian regulators really used it as a wake-up call and started to take this seriously and stop thinking about whether this asset class or industry deserves to exist or be a part of the economy, but more so, okay, this is here, and if we do nothing about it, Canadian investors and participants will continue to be at risk and potentially lose out on meaningful sums of money. And so rather than debate on the legitimacy or personal views on whether or not Bitcoin is a commodity or a security or whatnot, the Canadian regulators really just put in a framework that, largely reflected traditional financial frameworks for, broker dealers or exchanges, and worked with the industry to understand the nuances to put something in place that could protect or be more protective for Canadian investors than anything that existed or did not exist prior to. And so I think, looking ahead, I really anticipate that this unfortunate collapse at FTX will be used as a catalyst, in the US and other jurisdictions to take this seriously and understand that whether or not they think it's right or wrong, it's here to stay and it will continue to grow. And, regulation is an important part of that. So, I think on the back of that, there'll be, renewed confidence in the industry. And I think you'll see continued growth over the course of the next few years. And, certainly I'm excited to see what continues to be developed in the industry.
All right. Thanks, Dean and Lorien, for those final thoughts. And thanks again for being here. Thanks everybody for coming. A couple people have asked about the recording. There definitely will be the recording. It'll be on the YouTube Bitbuy channel in a few hours. So thanks again, everybody, and we'll do some clips. Martin, who's on the call here, has randomly drawn, he put everybody's name who has attended in the random generator. So we are going to be giving away a Kyle Lowry basketball, and the winner has randomly been selected. Also another person named Kyle. So Kyle Tingley has been randomly picked as the winner. Not sure who that is, but we'll reach out. We have the information. If they're not eligible for some reason, we'll pick a backup winner in email. But thanks again, everybody, for being here. Really appreciate it. Hope you learned something about staking. Hope you learned something about crypto in general and where we're at right now. And really appreciate everybody for being here. So thanks
fun.
again.
I really enjoyed that. Thank you.
Thanks, guys.
Have a great rest of everybody's day, and take care. Thanks.